Now, if your intention is, if the entity plans to sell an asset within 1 year, they have to reclassify the asset as non-current asset held for sale. What difference will it make to the readers of financial statements? And it has to be recorded at on initial classification, it has to be recorded at lower of cost or fair value less lower of carrying amount, I would say, lower of carrying amount or fair value less cost to sell. Initial recognition will be at lower of carrying amount or fair value less cost to sell. There was one more standard which is catering to all these assets. It is IAS 36 impairment of assets. IAS 36 impairment of assets. What does it say? We discussed it in the first session as well. The impairment of assets says that whenever there are indications of impairment, you need to test it for impairment. And testing for impairment means that we are comparing the carrying amount with recoverable amount. What is recoverable amount? What is recoverable amount?
It is the fair value.
What is recoverable amount?
It is the fair value of the asset which we can over which we can realize the asset at an arm's length.
What are the ways by which we can recover the value of an asset? Either by using it or either by selling it. Because there is a lot of noise at your end. I think you can write in the chat box if there is any query. So recoverable amount is either we use it, either we sell it. If you use it, you are going to get 4,50,000. If you sell it, you are going to get 4,80,000. What will you do? So recoverable amount is always the higher of the two.
So are we not following the conservative approach here? Like why we are taking the higher of these two?
Recovery is always higher. Conservative approach means you'll use conservative approach later on. That if your carrying amount is 4,30,000, 5 lakh, and your recoverable amount is, when you're testing for impairment, you compare it with recoverable amount. Only when you're in this situation, otherwise life is smooth. You do not need to test for it. You have bought an asset, your life is going on, you're of assets, you get into this situation of comparing with the recoverable amount. Getting my point? When you get into this situation, that what to do now? The asset seems to be impaired. The asset doesn't seem to be giving the value which we have recorded in the books. It is recorded at 5 lakh, but we do not believe we are going to recover 5 lakh. That's conservative approach. And we test it for impairment because there were indications of impairment. Impairment indications can be external indicators, some law, some new change in the market in terms of technology. Internal indicator can be, you know, the machine got damaged because of fire. Whenever there is an indication of impairment, we need to test them for impairment. And when we test them for impairment, we compare the carrying amount with the recoverable amount. And when we are at this situation, when we need to compare with the recoverable amount, and we are trying to take a decision, what shall we do with the asset? If we use it, we get 450. If we sell it, we get 480. What will you do? If you are the owner of this asset and you have to make a business decision that there is an indication of impairment, it is recorded at 5 lakh, but we are not going to recover 5 lakh of this value, though we bought it for this value. But even if we use it, we'll get 450. If we sell it, we get 480. What shall we do? What will make better business sense? What will you do? Whether you sell it or whether you use it. What will be your
from the business perspective? I would say if it is we consider that going concern, then I would like to use it. But if that asset is not
Banu, if you use any asset for a foreseeable period, and even then the total economic benefits which are going to flow to the entity in today's terms, when you use it, we take into account the present value of net inflows. Net inflows means whatever are the cash flows we are expecting to receive over the life of this asset, whatever the cash flows we are expecting to pay over the life of this asset, we discount all these cash flows to present value, and in today's terms, the cash flow which you are going to receive over a period of 5 years, if it calculated in today's terms, in total present value of all the net inflow is 450. But today if I sell it, I'll get 480. Why will you get engaged into an activity for 5 years which will result in today's terms cash flow of equivalent to only 450 when you can immediately get cash flow 480? What will make more sense?
Yeah, makes more sense.
Selling it makes more sense, I guess.
Selling it just makes more sense.
Selling it makes more sense. But you are also right in some way, because in reality, the expected cash flows are much more than the value of an asset. Like a sewing machine costs only 2,000, but the expected cash flows can be 1 lakh rupees. So there's no point selling that machine because it is capable of generating more cash flows than the value of an asset. It happens. But I'm talking of a situation, what if there are indicators of impairment? The machine got damaged. It cannot generate any cash flow. Even if you try to generation of cash flow will be equivalent to 450. So if you sell it, selling it will make more sense now, because you have reached a position where you are testing for impairment. You are in that situation now. You have to take a decision whether use it or sell it. Is the reason recoverable amount is always higher of value in use or net realizable value. Recoverable amount is always higher of value in use or net realizable value. Is this clear? So when we are testing for impairment, we are comparing the carrying amount with the recoverable amount, and from the recoverable amount we got to know that recoverable amount is 4,80,000. When we compare, if the carrying amount is higher than recoverable amount, and if carrying amount is higher than recoverable amount, if carrying amount is higher than the recoverable amount, is the asset impaired? The asset got impaired by 20,000, and the new carrying amount becomes, what is the new carrying amount? The new carrying amount is 4,80,000 to be recorded in books, 20,000 in the loss in P&L account. Am I right? Why I highlighted this while I was talking about IFRS 5, because if you notice now, IFRS 5, non-current asset held for sale. What if we plan to sell any asset within 1 year? What will be the recoverable amount? If we plan to sell, there is no use, If there is no use, what is left? You're left with only net realizable value in the recoverable amount column. If there is no use of an asset, we plan to sell any asset within 1 year, what we are left with? We are left with only NRV, right? The recoverable amount or the value we wish to recover is only in the form of selling now, because we plan to sell it within 1 year. If you plan to sell, we are no more using it. If you are no more using it, the recovery can only be done through sale. Am I right? So in case of IFRS 5 non-current asset held for sale, on the date of initial classification, if you see, there is an automatic indirect impairment that we are comparing the carrying amount with fair value less cost to sell. Fair value less cost to sell is actually net realizable value. Net realizable value. Fair value less cost to sell is net realizable value. We are comparing carrying amount with NRV directly because there is no use left now, because we have decided to classify it, and we are allowed to classify it only when we classify something as non-current asset held for sale when that asset is so there are criteria for classifying it as held for sale, criteria to be met, and the criteria is immediately available for sale. The entity is promoting for locating a buyer. They have decided to sell it. They have decided to sell it, and there is no intention to change the plan. So there are criteria to classify any asset held for sale. We cannot decide it whenever we want it. We cannot decide to sell an asset whenever we want it. Only if we meet criteria that the asset is available for immediate sale, we plan to sell it, we are locating a buyer, we do not intend to use it now, and we are going to buy a new technology, or whatever the reason, if we plan to sell it, then we cease depreciation. Cease depreciation means we are not going to recover its value through consumption of this asset. We are not going to recover this value through consumption of this asset. We plan to recover its value by sale. So the only option left to us is compare the carrying amount with fair value less cost to sell. So on initial recognition, you are indirectly testing for impairment. The only way of recovery now is sale. Are you getting the relationship between impairment of assets and why we are recording it at lower of carrying amount and fair value less cost to sell? I'm purposely highlighting it so that even if you forget that what should be the value, whether lower or higher, you should know that the carrying amount will be recorded at now. The new carrying amount will be lower of carrying amount and fair value less cost to sell, because there is an indirect impairment inherent in it. Since IS 36 impairment of assets cannot be applicable to it because there is no use now, we're directly comparing it with the net realizable value. So IFRS 5 non-current asset held for sale says that we have to compare it with the carrying amount and fair value less cost to sell. Is this clear? And it also gives an indication to the shareholders that if you plan to sell any asset within 1 year, you have to reclassify it as non-current asset held for sale. You cannot continue to show it as part of your IS 16 or IS 38 or any other asset. IS 40, even if you plan to sell it within 1 year, you have to classify it as non-current asset held for sale, which gives an indication to the whole world that these are the assets which you do not plan to consume into the business, or you do not intend to hold them anymore. For if you're using something at fair value model, then there's no fear. But if you're using something at cost model, and you plan to sell it within 1 year, you should classify it as non-current asset held for sale. So it gives indication to the world that you plan to sell, so that the users of financial can take better decisions. Hope you're getting it, that the intention of the management triggers the accounting for it. Is it clear whatever I've discussed till now? Hello? Is it clear whatever I've discussed till now?
Yeah.
Any doubt in?
Hello, Amit.
Yes, Manoj.
Can we have a situation where we have an asset which management wants to sell, but till the time the seller is found, till the time the buyer is found, we want to use it and we want to provide a depreciation?
No, we cannot. Even if it
Say,
is
say we have a machine.
yes, I got
Say
your
we
point.
have a machinery.
I got your point,
Yeah.
Manoj.
Yeah.
I got your point. That you have a machinery which you believe that till the time you get a buyer, you will sell it. But what if you have uncompleted orders on the basis of machinery? Since you are using it, your salesman has booked orders that okay, we'll supply 300 orders. And if the buyer also comes in to buy, until those uncompleted orders are finished, you cannot sell the machine. So it has to be available for immediate sale. Means it should not be in use. If it is an office building, it should be vacant. You may say that I have an office building till the time I get a buyer, I'll continue to use it. When the buyer comes in, I'll vacate the building. No, not allowed to be classified as under IFRS 5. If the building is vacant, available for immediate sale, there is a promotion of sale which is happening, advertised in the market. The management do not have an intention to reverse it. Then only it can be classified as held for sale. Otherwise, this can be a loophole which will be used by management to classify something as held for sale and do not charge depreciation to show the profitability higher. Getting the point? Hope it is clear.
Amit, but I mean, say we have a machinery, okay, which for which we are, of course, we are making say marketing that we want to sell it, but till the time the buyer is found, we are using it, and I mean, we have say machinery where which is actually say manufacturing a final product. So in that case, I mean, can we continue to provide it as a depreciation on it?
Manoj, you are being emotional. When the machine is in the premises, why can't we use it? Isn't it? And why should I wait for the buyer to stop using the machine? So if that's the case, Manoj, continue to show it as part of your IAS 16 property, plant and equipment, because you are consuming that asset into the business. So please continue to charge depreciation until you have really decided or made up your mind that you can give away this. So most of the doubts,
I mean,
I know.
sorry.
Most of the doubts in
maybe
most of the doubts in accounting I encounter are emotional. Actually, they are not business. Okay. So I'll give you a tip in learning IFRS. Whenever in doubt, always check with yourself whether is this an emotional decision or is this a business decision. If it is a business decision, there are no emotions in it. Okay. Because business always takes only sensible decisions. And sensible decision is there's no point using this machine. We cannot use this anymore because there's a change in technology or whatever the reason is the reason we plan to discontinue it. If we plan to discontinue, even not only a machine, even we can plan to discontinue an operation. If we have discontinued an operation, we'll show the results of that discontinued operation separately. You'll have to show the results of the revenue being earned, the cost being incurred from a discontinued operation separately, and the profit or loss from the discontinued operation separately. We cannot be emotional if we plan to stop or discontinue something. So in your example can be applicable to a discontinued operation, Manoj, not to a particular machinery. That if there is an operation which you plan to discontinue and you plan to discontinue it within 3 months time or 6 months time, you'll continue to use it, you'll continue to manufacture, you continue to use all the machinery in that operation, but you need to show the results separately. Yes, it is possible only in that scenario.
Yeah.
but not to one particular machine, not to an individual asset. Clear?
Yeah, all right.
Okay.